Live. I will admit everybody in. Awesome. Chat. Welcome everybody. We are happy that you can make it out to tonight's webinar. Let me go ahead and participants. I'll just mute you guys for the time being, just so that there's no background noise and that everybody can hear well. So again, welcome. So happy that you guys can be here. My name is Sam Thompson. I am a mortgage agent in the Barrie Simcoe area, but serving all of Ontario. And we are joined tonight with RuthAnn Osborne, who is a local real estate agent. So if you guys look at the chat, sort of as people are coming in, it'll have a breakdown of tonight's schedule. So as it's stated, so I'll start and I'll be chatting about the mortgage process, some mistakes that we see new first-time buyers making, some tips and tricks, a lot of grants and incentives that you guys qualify for. And then once I get through and finished all of the boring numbers, RuthAnn's going to take over with the exciting side of looking at the real estate picture of, dealing with the buyer's agent, looking at properties, all of that stuff. And then after that, we're going to open it up to question and answer. So at that point, you can take yourself off of mute if you'd like, and just ask your questions. Or if at any point during my conversation or when RuthAnn gets started, if you have any questions, feel free to write them in the chat. And then once we get to question and answer, we can circle back on any you have. And especially go for those questions, even if it's something that RuthAnn and I haven't talked about, because really that's where you get the most out of the webinar, when you're actually asking questions and, drawing. We can chat all the day about mortgages and real estate, but really we want to open it up to any questions that that you guys have. So you'll also see there is a link in the chat box with a booking for a pre-qualification call with myself. So we're going to have a contest running throughout the duration of this webinar that if you book a pre-approval call with myself, it will also count as an entry into winning a $25 Tim Hortons gift card. Joe, myself, RuthAnn, we all love Tim Hortons. So if you sign up for an appointment and you chat through some mortgage numbers with me and get a pre-qualified amount, you'll also be entered into an awesome draw to win some coffee, or now that it's finally summer, an ice cap, iced coffee, whatever suits your fancy. So I think I've stalled enough. I think whoever was going to be here is here. So I will go ahead and just share my screen, and don't forget any questions that you have. Please just type them into the chat box. And then at the very end, we can cover off anything like that. So you should be able to see my screen now. Awesome. So again, welcome to the first time home buyers webinar. So I will be covering off the mortgage process, getting a mortgage mistakes, how to get some money back when you buy. There is a ton of slides I have on grants, incentives, and rebates available to you. We'll chat about getting a down payment, and then I'll end off covering the first time home buyer incentive. So a little bit about myself. Besides I use the same picture twice, is that I'm licensed with all banks and lenders. I work at Verico Mega Mortgages, and I'm the first-time buyer specialist in our office. I'll introduce you to our office. That's Joe Bladdock, Terry Lynn, and myself. But I work a lot with the first-time buyer. So if you reach out to our office, or if you click the link that's in the chat, or want to schedule an appointment, likely it's going to start with me. And then I can, get an idea of what you qualify for and get you ready for your pre-approval. Again, as I had mentioned, we do have a contest. So if you want your chance to win a $25 Tim Hortons gift card, all you have to do is schedule an appointment with myself. It can be a 10-minute appointment just to chat about any questions you have. It could also, we could do a full pre-qualification and start the steps to get you into a pre-approval. But the link is found in the chat, or you can just go ahead and email me directly at sam@home-buying-seminars.ca. All right, let's get started. So here's a case study of a couple that came to one of our seminars. Yes, they used to be in person, and just take a look at some of the, the facts and figures around this couple. It may look familiar to you as a first-time buyer. So they only had $1,400 in their bank, didn't know their credit score, and approximately their household income was about $65,000. So what ended up happening was just a few months later, they moved into their very first home with biweekly mortgage payments just under $500. And you can see their chat. Best thing that Jennifer and Joseph did. We like this, or I like this case study because it really shows, regardless of where you are in the process, whether you don't know your credit score, you think you have a low household income, or if you already have a down payment fund saved, your credit score, you have your Equifax statement in hand. Regardless of where you are in the process, we really want to work with you to get you approved and get you into your first home. So with all of this being said, where do you start? Getting pre-approved is going to be the ultimate and best first step moving forward in your your journey into getting your first home. So it avoids disappointment, speeds up the process, and can save you thousands of dollars. So I'm not even joking about this. It's a great indicator of what you qualify for. And for avoiding disappointment, the last thing that Joe and myself want to see is you guys are going out with RuthAnn, you're finding houses that you love, that are priced at $550,000, only to find out you only qualify for $450,000, and then you start to backtrack and you realize that what you qualify for isn't all of the homes you were just looking at. We want you to know an accurate idea of this is exactly what I could qualify for, and it also helps RuthAnn out when she's taking you to homes to know what's within your budget and what type of home you can get with that budget. It also presents a stronger offer. The seller will take you more seriously because it's shown that you've actually done your homework, you've connected with a mortgage agent, you have already gotten your financing looked at by a lender. And one of the best things is it does guarantee your interest rate for about 120 days. So this is really big because if interest rates, I think 4 months from now is like October 22nd. Once we get into the fall, if it does start to get busy and we do start to see, the rates rise a little bit, you'll be protected at your pre-approved rate whenever you get it. And if the rate currently is lower than what your pre-approval rate is, then you'll get the lower of the two. So it's really sort of a non-option question of why to get a pre-approval. So in terms of how to get pre-approved, usually it starts with a text or by clicking the link and booking an appointment with myself to also get a chance to win a Tim Hortons gift card. So it can be done completely over the phone, over text, email, or Zoom. We do a lot of Zoom calls. I think I like it because then it allows us to get a bit of face-to-face in COVID and gets an idea of who you're working with, who I'm working with. It's really a great way to meet. But we're not required to meet during the process at any time. You don't have to take time off work. A lot of the calls I've been doing lately have, been after 6 o'clock, or a few of them even at like 8 o'clock, because, it's a young family, they have kids, they're working around a bedtime schedule. So whatever timing works best for you, I can do my best to accommodate that for our call. The only things that you'll need are your pay stub as well as your photo ID. Any other documents that we'll require, we can send over, text, email, or fax. So most of the process is done completely virtually, usually through email, but sometimes it'll be multiple Zoom calls or a couple different phone calls. So why would a Canadian use a broker versus a bank? I mean, you guys already, most of you have a preferred bank where you may have, credit cards, lines of credit, anything like that. Why wouldn't you just go to your branch? So brokers are able to offer you more variety. So We can also protect your credit score because we just do one hard credit check, and it's valid across all of the lenders that we work with. It's similar to, if you're looking to get a car loan and you go to all of these different car salesmen, and for reviewing financing, they all pull credit. All of those different pulls are going to be hard hits on your account. The same with if you get your mortgage processed, including credit, at a number of different banks. Each of those is going to be a hard hit, but with us, the one hit that we do is valid across all the lenders, and we can repeat the same credit check on a different file as long as it's within with a different lender, as long as it's within the 30-day time frame of getting the credit check in the first place. Buyers having a unique story. So we actually get to communicate directly with the underwriters at these specific lenders. So you'll find that actually in a lot of cases, I don't want to say no mortgage is easy, but they're definitely all different, and they all have their different, problems or small little things that arise. So the great thing that you guys get to rely on is our relationship with the lender. We get to communicate directly with them. We can work together to solve problems that we could see come up, or to help explain your story a bit more. And the last thing is just using a broker is completely free. So you don't pay us at all during the entire process. No proceeds of money that you're paying goes to us. We get paid directly from the lender in a sort of a finder's fee. So using us is completely free, and typically we do get you a better rate versus the traditional, Big Five bank, just because we have access to more products. So here are some of the lenders we work with. Some you might recognize, such as Scotia or TD. Some you might not know, like First National. But actually, First National is funded by TD, so it's kind of a a Fido Rogers scenario there. So really, I like this slide because it illustrates the number of banks that we can submit your deals to, and it also highlights all of the products that are available to you based on working with a broker, rather than having to individually go to CIBC, RBC, BMO, HSBC, whatever it is. We're sort of like a one-stop shop. Finding mortgages that fit. So again, as I said, not every mortgage is easy, but also no mortgages really are that similar. You could have very different house plans. Let's say if you're looking for a short-term or a portable mortgage, if you're looking for a purchase plus improvements, or looking for a new build, or just for a flip, there's a lot of mortgage needs that you'll realize you have. And that really helps us because we have access to a number of different mortgages and mortgage options available. So meeting with you and working with a broker, we can really narrow down what will best suit your scenario. Back to Tim Hortons again. Canadians use brokers because brokers have actually been shown in a study to save their clients on average an additional $42 per month. So we've divided that up and worked out the math, and that works out to be a small Tim Hortons coffee every weekday of the month. It used to be every day of the month, but Timmy's, of course, raised their prices and ruined my slide. But it is every weekday of the month. So if you like coffee and you want to get your mortgage funded, definitely work with us because we'll buy you a small coffee every weekday of the month. Alrighty, so now that I've covered off the differences between a mortgage broker as well as going right to your bank, I'm going to look at some of the mistakes that first-time buyers make, and sometimes not even first-time buyers. If it's, they've been through the process, we still see clients making some of these issues. So mistake number one is just ignoring your credit score. There's no sense in getting stuck with a bad rate because you don't know what your credit score is, or even worse, you don't want to know what your credit score is. The best thing you can do is just being proactive to see what's my credit score, and what work do I need to do to raise this score so that I get the best rate when I start my pre-approval and when I look at getting a full approval on a home. So you can check your score. If you want to pay for it and get a pretty exact number, you can do that through Equifax or TransUnion. There is some free options out there like Credit Karma, or a lot of mobile banking apps. I know I'm with CIBC, and there is a credit check section of the app. The free ones we find aren't exactly perfect to what your score is, but at least will give you an idea of what sort of range you're at and how strong your credit or score is, or if it needs some work. Also, if you have gone through a bankruptcy or consumer proposal, make sure you follow the 222 rule. Don't ignore this because it's definitely going to be something that will cause a hiccup to our call and our submission process. So what the 222 rule is the bank is not going to lend you a mortgage until you at least have had 2 credit cards for 2 years with a $2,000, that's supposed to say limit, not balance, but a limit. So if you have been discharged and haven't done it, your first step should be getting 2 credit cards and start building that credit history for 2 years. This is a big one because we have seen, some clients, they'll get 1 credit card, but it's not quite enough for a lot of the A-list lenders that we work with. They do require that you have at least 2 credit cards opened since the discharge. Looking at credit score, so anything above 680 is the minimum for all of the Canadian mortgage insurers. That is sort of the cutoff. You can get in below that at anything above 650, but for CMHC, Genworth, and Canada Guarantee, it does have to be above 680. So if it's in the 700 range, you have nothing to worry about. If it is below 600 at all, we will need to look at, fixing your credit a bit, and we can review some strategies on how to build your credit score, such as, paying off balances before the end of the month so that it doesn't appear on your statement, little things like that to help build that score until you're ready to be submitted with an A lender, or we can also pursue the option of a private lender or through a B lender. What goes into a credit score calculation? So credit history is the biggest one. So that's just the length that you've had your credit accounts. So any, credit cards or personal loans you had in college or maybe even high school, if you keep those, it'll actually help your credit score out, because the minute you close one of those accounts, you also lose all the credit history associated with it. The second biggest portion is debt owed. So it is, usually we ask it as a question, but it gets a bit tongue-tied. So it's actually a lot better to have a $900 balance on a $10,000 limit card versus a $900 balance on a $1,000 credit card limit. The reason we say this is you might think that $900 on each card should be, registered as the same. It's the same amount of money. But having a $900 balance on a $1,000 credit card states that you are using 90% of your credit limit. So it actually can help grow your score. If you use under 50% of the credit limit that's available to you. Mistake number 2 is not reviewing your options. So there's a lot of different rates that you'll see out there when you're shopping. A lot of different lenders. I already went through some of the slides with the lenders we work with. Some different ways to pay as well as penalty calculations. So just looking quickly at rate differences. So this one, it's only 0.15% different. Is there a big difference at the end of the day? Yeah, actually, it does add up to be quite a lot. So again, that works out to be about $1.43 per day in savings. That translates to $42 per month, which translates to just under $10,000 over the life of your mortgage. So getting the best rate on the day is going to be super important in saving you money that is just, going directly towards interest. Different banks. So there's more than 1,000 different mortgage options available. We can run your specific scenario by each of the bank, and that can result in significant savings. It also allows us to look at what lenders or banks are currently offering any promo. So if they're offering any cashback mortgages, we can look at that option if you want to, put those towards closing costs, anything like that. We have a lot of options available. So we can look at what current banks and lenders are offering and pair that with what you're looking for when you're going into your first home. Monthly versus biweekly payment options. Is there a difference? Yes. So biweekly payments are actually going to pay your mortgage off faster, and they're going to go save you money in interest payments. You'll see on the chart here, the yellow line is going to be the biweekly payments, and the blue line is a traditional monthly payment basis. So you'll see that, they start out at about the same, but then you'll see it pretty drastically gets different by choosing biweekly payments, just because you're making 26 payments per year rather than a traditional 12 monthly payments. Different penalty calculations. This is a big one. I know that last year, some of you might have seen an article that was released by somebody who was charged $20,000 by TD in a penalty calculation. And just in a mortgage penalty for breaking their mortgage. Sometimes at the end of the day, life happens. You're going to have to move for work. You might have to sell your home. You might go through a divorce or a separation, and it'll require you to break your mortgage midterm. So there's going to be a penalty associated with breaking your mortgage, and we want to stick you with a lender that's going to have maybe softer penalty calculations. This one a lot of people don't really think of, because of course when you're signing up for a mortgage, why would you think about breaking it? But sometimes it does happen, and we want to make sure that you're not stuck at a astronomical penalty that you'll end up having to pay out of pocket to even do a refinance, or like I said, if you have to move, sometimes that's the only option. Mistake number 3 is borrowing too much. So we don't want you to borrow too much that you end up house poor. We want you to, purchase within your means so that you're not overextending, using all of your savings, and are living paycheck to paycheck just to cover the mortgage payments. We do want to make sure that you're living well in the new home that you buy. You're able to, keep ordering pizza, extending your Netflix subscription, whatever it is that you like to do. We want to make sure you can live in the new home that you buy. And on the topic of borrowing before you buy is a big mistake, especially even if it's already been approved, you already have a live offer. Do not get an additional car loan or do any big changes to your finances before the acceptance of an offer and the closing date of the house, because the lender can always check back at where your credit is at, or sort of where your liabilities are. And if they see, a new car loan that's making payments of $300 a month, that can completely, shift financing, and, it leaves you with a risk that you might not be able to proceed. So if you are planning on getting a car loan specifically, make sure that you get your mortgage first, because we do see that even payments of $300 a month, which really isn't too bad, based on some of the biweekly payments you can see, it does affect your maximum qualifying amount, sometimes by quite a bit, by a large amount. So it's good to not have a car loan. But if you do have a car loan, we can still work with that and get your mortgage processed at the maximum amount that you can qualify for. Mistake number 4 is not forgetting about closing costs. This is a biggie. It's the the secret monster that jumps out at first-time buyers after they're already focused on getting the down payment together. They're getting all their documents together. They're already focusing on satisfying all these conditions to close the house, not thinking that they'll actually need closing costs. So when we did these seminars in person, we had awesome laminated papers we'd give to everybody with all of the closing costs broken down. Instead, you're going to be getting it via email, but look for your closing costs to be about 1.5% of the purchase price. So this covers off lawyer fees, land transfer tax, and all that sort of thing. And it's also good to note that as a first-time buyer, in your closing costs is the land transfer tax, but there is a land transfer tax rebate available to you to help soften that closing cost a bit. So I will get to that a bit later in this presentation. But yes, don't forget about closing costs. The last mistake is not being pre-approved. It really is quite simple. It doesn't take long. It could be a half-hour meeting with myself. We just need a few documents from you: ID, pay stub, employment letters, and it's completely free. It can help win you an offer, and we can send it to you via email. I think with COVID, we're seeing a little bit longer times in return from lenders, but typically we can get it within 2 to 3 days. Don't forget to set up your home buying team. So this is important to have a mortgage broker or agent that is working for you. I will also, I'm sure RuthAnn will cover this off in her presentation, but definitely focus on using a real estate buyer's agent. Don't rely on the seller's agent. use a buyer's agent, because then their primary duty is to make sure that you are looked after and you are the primary responsibility of your buyer's agent, rather than relying on the seller's agent as well. It's also good to have a home inspector lined up, as well as an insurance broker and a real estate lawyer. Any of those things, once we get to that stage, you can either ask myself, and we can refer you to some local real estate lawyers or home inspectors that we've used before, or feel free to ask your agent, RuthAnn, for any of these as well, and we can get you connected with some local people in your area. I will skip over this case study just because we have a lot to go through still. So I'll cover off how to get some money back in the form of grants, rebates, credits, and refunds. So if you have your pen and paper, this is where you're going to want to take some notes, because there is a lot of information, but it is all ways that you can save some money and get some money back. So first-time buyers are entitled to a refund of approximately $1,000 if you purchase an energy efficient home. So there's a number of programs that will allow you to do this, and it will give you a refund of 10% of your CMHC insurance premium if you purchase a energy efficient home through the program's guidelines. So looking at that, on a purchase price of $425, the refund works out to be about $1,100 back into your pocket. This is what I mentioned before. There is an Ontario and Toronto land transfer tax rebate available to you. So when you're purchasing a home, you will have to pay land transfer taxes. So the refund is approximately $4,000 if you're purchasing a home in Ontario. If you are interested in buying a home in Toronto, they do have this lovely Toronto land transfer tax on top of the Ontario land transfer tax. So there's an additional refund if you're purchasing within Toronto. So looking at the combined rebate, if you were buying a home in Toronto, would be $7,725 available to you just as a first-time buyer. New to Canada benefit. So this is awesome, and it's available to all people who are permanent residents within the last 5 years. So what they've done is they've reduced the employment requirements that you need to 3 months. And there's also no credit score that's required. So they'll only require bank statements from you, some phone bills, insurance statements, and that sort. So definitely reach out if you are new to Canada within the last 5 years and have your permanent residency, because there are, it's a great program to help you, get that foot in the door and get entered into the, home ownership market. If you're planning on buying a new build home, or if you're looking at building a new home yourself, there's an HST rebate available to you as a first-time buyer. So anybody purchasing a new home, again, either from a builder or yourself, there are HST taxes that you will have to pay on it, but there is a rebate as long as you're a first-time buyer. So for example, on a home costing $425,000, the rebate works out to be about $33,150 back. So if that doesn't incentivize you to buy a new build home, I don't know what will. But no, seriously, it's an awesome program available to all first-time buyers. There's also a tax credit that's available. So this is something that you'll fill out on your income tax form the following year after your first home purchase. So there's a line, I'm blanking on what specific line it is on your tax return, but you just fill in $5,000, and then for this example, on a family with a household income of $85,000, that works out to be $2,100 back into your pocket. There's a number of our lenders that also offer a free 1-year home warranty as a first-time buyer. So it covers home heating, air conditioning, electrical, water heater, and plumbing. So if anyone knows Murphy's Law, the likelihood of something going wrong in your house is probably going to be within your first year of home ownership. So this is an awesome program available, and it covers up to $10,000 in repairs, and there's absolutely no inspection that is required. So it's an awesome program. If you are looking at, buying a home, but you're finding it hard to get a down payment together, but you do have a bunch saved in your RRSP over the years, even if it's a sort of a profit sharing RRSP with your work where they contribute some as well as you, you can withdraw from your RRSP up to $35,000 each, or $70,000 per couple. in the form of a home buyer's plan loan. So this is going to save you, roughly $21,000 in taxes by taking out a loan essentially on your RRSP so that you don't pay any taxes on it. You just repay the same amount of funds back in installment payments. So to partake or be a part of this offer, you just have to be a first-time home buyer, either someone with a disability, or if you're buying a home for someone with a disability, or if you just haven't owned any property in the last 4 full calendar years, you can qualify for that RRSP home buyer's plan. So how to get a down payment even if you don't already have one. So on the screen now is just going to be a list of municipalities that currently offer in some form or another a down payment assistance program. A lot of them have different names. It might not be called exactly that in the municipality that you currently live in. But all of the ones that were just on the screen, I'm going to generalize it a bit because they do have their own, lending policies and specifics. But typically, they're offered to applicants who are renting in the municipality. So a lot of them will require at least one. Some of them require 2 years of lease history, with your name on it, proving that you have been renting in that municipality. And a lot of the times they'll give 5 or 10% down towards the down payment of your first home. And the beauty of this system is that it is forgivable after 20 years. So there's absolutely no repayment required, which is awesome, especially if you're looking at purchasing your forever home. If you live in the home for long enough, the loan is completely forgiven and you don't owe anything back. So usually there is a wait list for the programs because they're municipally funded, and you have to wait for those funds to be freed up, or if 10 people have applied before you will just be put on a waiting list for that. But each of the municipal housing grants have different guidelines in terms of what your maximum household income can be, as well as max purchase price. So reach out to us and we can get you more information about the specific municipal grant available to you. So other ways of accessing a down payment can be through line of credit, some rent-to-own programs that you can partake in and be a part of, gifted equity from the seller, gifted money from family. We're seeing it more commonly and more commonly and more commonly that first-time buyers are needing to use the bank of mom and dad to help them qualify for their home, just because it has become very, very strict and tight for first-time buyers to get into the market. So I'm at the end of all of the grants, rebates, and incentives. I know that there was a lot of information, a lot of numbers, but I've broken it down on the screen here that if you were to stack a lot of these rebates or refunds on top of each other, we've saved approximately $52,000 just for taking part and using some of these programs. The biggest thing to note here is that while you may not have known some or all of these exist, they are available to you just because you're a first-time buyer. So the benefit of working with myself and Joe and Terry Lynn at the office is we can run you through all of the rebates and first-time buyer incentive and grants that you qualify for to make sure you get the most money back when you buy. Before I get into the first-time buyer incentive and close off my end of the presentation, I did want to do a second reminder for the contest to schedule a pre-approval appointment with myself. So again, it enables you to win a $25 Tim Hortons gift card. I will add another link in the chat just in case any of you have missed it, or if you check the chat now, you will see the link to book that appointment. So now this is the first time home buyers incentive. So how does it work? So it's a shared equity loan through the government of Canada, which will allow home buyers to reduce what they're paying monthly for their mortgage payment without increasing their down payment. So the incentive, it's not interest bearing. It doesn't require ongoing payments through the life of the mortgage. And it's worth 5% down on the purchase of a resale or existing home, or you can choose 5 or 10% if you're buying a new build, new construction home. So let's just look at a quick breakdown of what it looks like to use the incentive versus somebody who purchased a home without the incentive. So you'll see their income is the same at $100,000. They're buying the same home price at $421. and their down payment is the same. You still have to have a minimum 5% down payment to use the incentive. So that's $25,000. But now we'll see the column on the right has the additional 5% down from the incentive. So what you see is almost a trickle down effect where the insured mortgage is lowered, the mortgage insurance premium is lowered, and their monthly mortgage payment is reduced by $123. So if you tally that up yearly, that works out to be a difference of $76 per year that you're saving, just by having that additional amount towards the down payment through the government. So that money is completely yours. You can save it and start building an emergency fund. You can, install that hot tub that you've been wanting to install. You can save up that money and put it into a lump sum payment back onto the mortgage. That money is completely yours to do whatever you want with. So properties that are eligible, any new homes, any resales, duplex, triplex, condos. Basically, if RuthAnn can find you the property, it most likely is available for this program. So who can apply? So any Canadian citizen, permanent residents, even if you're a non-permanent resident, but if you're legally authorized to work in Canada, you can apply for this as well. Your maximum household income has to be under $120,000. And the total loan value is set at a maximum of 4 times your household income. So just to explain that broken down a bit. So if your household income was $100,000, the maximum mortgage loan amount that can be registered to you using this incentive would be $400,000. And it's also subject to qualifying income requirements set out by the lenders. As usual, you have to have the income to support those payments. And at least one of the borrowers must be a first-time buyer. Again, if anybody is looking at purchasing in Toronto or the Greater Vancouver area or Victoria, and that's the Greater Toronto area, they have unleashed a first-time home buyers incentive 2.0, where they've increased the maximum income to $150,000 per household, and they've increased your borrowing maximum to 4.5 times the household. So this was just a new incentive to help, boost people who were sometimes even using the incentive boxed out of the market. So it increases the theoretical max from $505,000 to $722,000. So before I hand it over to RuthAnn here, I just want to introduce you guys to our mortgage team. We handle the difficult conversations. You can see us at the Barrie waterfront there. We definitely want to be the ones on the phone for you, chatting with the lender, making sure that everything goes smoothly for you, because we know that getting, your first mortgage can be a very stressful and busy time. So we want to make sure that we're the ones that are handling those difficult conversations for you. And just to further meet our team, so you've met myself on the left. You can also meet Joe Bladdock, who is the mortgage broker at our office. He's been in the industry for over 10 years and is super knowledgeable about anything from, first-time buyers to rentals to second investment properties, whatever it is. Joe's your guy. And Terry Lynn is also a mortgage agent in our office and works primarily with getting all the approvals in. So she's like the document queen in our office. Once you've chatted with me and once RuthAnn has found you a home that you've put an offer in, likely you're going to end up working with Terry Lynn to get all of the fulfillment together on the purchase of your first home. So thank you guys so much. Remember to get pre-approved. You can call or text either of the numbers that are on the screen there, or you can visit our Facebook page, Be Mortgage Free. Facebook.ca/Be Mortgage Free to arrange your call back today. So that is the end of my presentation. Thank you guys for lasting with me this long. I know it's a lot of information. I just resent the link in the chat for the appointment booking, where I'll chat with you about your finances and we can see what you qualify for. So also, if you have any questions, feel free to write them in the chat, and RuthAnn and I will circle back around to them. But without needing to talk anymore, I will hand it over to you, RuthAnn, to chat with us about the real estate process. So over to you.
Awesome. Thank you so much, Sam, and welcome everybody. Hello, my name is RuthAnn Osborne, and I am very excited to be with you here tonight. And I'm so glad that we have all these people here tonight who want to be educated, You want to be educated about a mortgage. You want to be educated about the right steps to take to buy a house. And you know what? I applaud you. That's very good. That is definitely the best way to go, the best way. So thank you very much. Now, the other thing that was great was that when you guys had gone online and filled out what you were interested in and what you wanted to hear, and that's extremely helpful. So a lot of you had said, as far as the real estate side goes, what's next? Now what? What do I do? And that is absolutely excellent feedback. So I'm going to start off. I'm going to tell you guys kind of the process of what goes next after you get your mortgage. And then we're going to go from there. But I want to introduce myself. I'm RuthAnn Osborne, and I work at Remax Team Gorin, Remax Cares in Windsor, Ontario. If you live down here in Windsor, I'm sure that you have heard of Team Gorin. We are everywhere. We're on the radio, the TV. My brother went out golfing with a friend, and his friend had Team Gorin golf balls. So we are everywhere. But if you aren't in Windsor, you may have heard of us as well, because we're not just the number one broker team in Windsor. We're also not just the number one broker team in Ontario, but we are the number one broker team in all of Canada. So there, you very well have probably heard about us. I'm very lucky to get to work on such an awesome team full of people. And every day, Monday to Friday at 9 o'clock, we have a meeting. And during that meeting, we talk about what's going on in the real estate world. We're updated with new information about the market. So every single day, we're getting new information about the market. We're getting educated on it. We're sitting down together and we're talking. And last week, one of the questions that we were asked was, if you could educate people in real estate, what would be the number one thing that you would want to tell them? And I thought, man, this is the perfect time for this, right? So the number one thing that people in my team would like to educate people on was knowing the difference between a selling agent and a buying agent. So that is where we are going to start, because that is really the place to start when you are out there. So I'm going to share my screen here with you. Got a little bit of a PowerPoint. I don't know if that went full screen. It's going to try. There we go. Okay. So once you have gone and got a mortgage, which is really important that you go and kind of see where your financial ducks are, get those financial ducks in a row. Then the next thing that you need to do is you need to find an agent. Okay. So there are two different kinds of agents. All right. And this is extremely important, because a lot of times the first thing that people do is they get all excited. I want to buy a house. I'm getting married and I want to buy a house. Oh, I'm moving. You know what? I'm going to buy a house. Oh, my company is now letting me work from home on the internet and I can live anywhere. I want to buy a house. Windsor's the cheapest. Move here. We're the cheapest. Move here. You'll like it here. But they go online, they jump online, and you look at stuff and you go, oh, I really like this house. And you call the phone number that's on that listing. And who you're getting is the listing agent. Okay. So, and then the listing agent, I mean, the listing agent's great, right? But at the same time, there's only certain things that a listing agent can do for you. Okay. So a listing agent, they can arrange to show you the property. They can assist with obtaining financing for you. They can direct you where to go. They can provide details on the listing, and they can explain the forms, and they can explain agreements and stuff like that with you. Okay. Now a buying agent. So a buying agent is any agent that is not selling that house that you're looking at. Okay. So right now I have a beautiful house up at 1641 Goyu Street. I would be the listing agent for that. Okay. So if you were to call me, these things with the listing agent are mainly the only thing that I would be able to do for you, because my legal liability is to my seller, to the person that I am listing the house with, to get them the best deal. Okay. Now, if you are calling me and you're saying, listen, I like this house and it's, listed by so-and-so from wherever, it's not me. I am now a buying agent. Okay. So I'm your buying agent. So as a buying agent, I can do all of the things that the listing agent can do, but I can also provide confidential assistance. Okay. Confidential is the key word here. Also, I can give you expert advice on the price. I can give you recent sales in the area. I will give you statistics, And I'll even give you reasons not to buy. Okay. Your listing agent isn't going to give you reasons not to buy. They're going to give you reasons to buy. Okay. But the buyer agent's going to be like, yeah, I'm pretty sure there's a crack in this foundation. You need an inspector, something to, think about. This is important, very important. They're also going to put clauses in like a home inspection or help you to get a pre-inspection, stuff that's going to protect you. They're going to structure and negotiate the offer in your best interest. Again, the listing agent is working for the seller in the seller's best interest. They're going to discover and disclose any information about the property, what the seller bought the house for, and when they bought the house, recent activity in the area. And mainly they're going to help you become a more educated buyer for that house and that area. Okay. So I think the best way to describe it is that a listing agent, if you go with the listing agent, it's kind of like going to court and having the same lawyer as the person that you're standing against. Okay. The other thing that people don't know, most first-time home buyers don't know, is that a buyer's agent is completely free. All right. It doesn't cost you a penny. So if I'm going out with you and I'm showing you homes and I'm your buyer's agent and you buy a house, you don't owe me anything. The listing agent, that is where I get paid from. Okay. So keep that in mind. And that's how it is across the board. So that's very, very good news. Now, the other thing is that every time anybody, when you are looking at a house, our Real Estate Council of Ontario requires an explanation of the type of services that are available to customers. Okay. And this is extremely important too, because you need to know the difference between being a client and being a customer, because you have a choice. Okay. So I'm just going to read this here because they will give you a form and it's called Working with a Realtor. And it really lays this out and it explains the difference between the two. And I'm just going to give you a quick breakdown of it. So it mainly says the broker must document the relationship being created between the brokerage and the customer and submit it to the customer for his or her approval and signature. The most common relationships are a client and a customer. There's other options available too. So a client relationship creates the highest form of obligation for a realtor to a customer or to a consumer, sorry. The brokerage and its sales people have a legal responsibility to represent that person's interest of the client in a real estate transaction. The broker must protect the interest of the client and do what is best for that client. A brokerage must strive for the benefit of the client and must not disclose any client's confidential information to other people relating to the transaction. They also have to do every reasonable effort to determine any material facts relations to the transaction that would be of interest to their client, and they must inform their client of all these facts. Okay, so when you're a client, they are legally obligated to work in your 100% best interest. Now, if you are a customer, okay, so if you call the listing agent, you see the picture, you call that number on there, you will be a customer. Okay, you will need to sign a form, and it will be a customer contract. Okay, so if you are a customer, a customer does not wish to be under a contract as a client with a brokerage. A realtor is obligated to treat every person in a real estate transaction with honesty, fairness, and integrity. But unlike a client, provides a customer with a restricted level of service. Services provided to a customer may include showing the property or properties, taking customers' direction to draft an offer, and presenting the offer. That's pretty much it. So those are pretty important things to know. All right. So please keep that in mind. So after you've done that, you know the difference. Now you got to find a good agent. You got to find a good buyer agent because you guys are buying. So you need to ask some questions. All right. Shop around. I mean, we're in the day of Google, and I'm sure that everybody Googles pretty much everything. You want to go out for supper and you're in a different city, you're going to Google best place to eat. Okay. What are the Google reviews for this place when somebody recommends them to you? Do that. Do that with your broker. Do that with your agent that you're looking up. Go on Facebook. Check out their Facebook. Absolutely. Scope them out. Be a bit of a creeper. It's okay. But then when you sit with them, ask them questions. How many homes have you sold this year? How many homes? Did you know the average agent sells between 7 to 9 homes? That's it. Okay. You want somebody with a ton of experience, a ton of experience. We have agents here, like myself personally, last month, I sold 6 houses. We got agents that are selling 60 houses a year here. Okay. That's experience. You want somebody who's in there every single day. Where does your team rank? If they're on a team, where are you? Because there is a list for that. If they're not on a team, where do they rate personal? Ask these questions. How many home buyers do you work with every month? How many people do you work with in your office? Okay. Do you lock me into a lengthy contract? You need to know these things, right? And a very important question is, are you a full-time agent? Okay. It is so beneficial for you to work with a full-time agent that is giving their 100% to the job that they are doing, because this is the biggest investment you are probably going to ever make in your life. Okay. And you need somebody who's going to be there for you whenever it is that you need to get that offer in, or whatever it is that goes on. Okay. So I really encourage you to work with somebody who is a full-time agent. Now, also, another question to ask is, how is this agent going to get you up-to-date information? Okay. Are you going to get emails from them? How often are you going to get these emails from them? Are they, the emails that they're sending you, are they going to be up to date? All right. Sometimes there's emails that different brokers and people use that aren't always up to date. Okay. And then that's really important, especially in a fast moving market. It doesn't really matter where you live in Ontario. The market is moving fast, and you need to be able to see those homes right when they come on the market, so that you are able to get a pre-inspection. You're able to, your real estate agent is able to send the broker side of the paperwork, you know, over to Sam and have him look at the house and say, oh yeah, these guys are good to go. Absolutely. Tell them to put in. They don't need no financing condition. They all good, right? That's important stuff for you. So also, does your broker or your agent work with offline listings? All right. In our office, as an example, we have 30 agents here, 30 amazing agents, and we do quite a few exclusive listings. Okay. So these are listings that aren't necessarily up on the market yet, or they might not be going up on the market. They're people who just kind of want to keep it personal. And in our office, we're able to say, hey, listen, I have this listing. It's not going on the market. So I know that you're looking for this 3-bedroom, 2-bathroom in this area that's a raised ranch, and let's jump on this one. That's a lot less competition for you out there. That's a good question to ask people. Will your agent take you to see for sale by owners? This is a good one. If you see a house that is for sale by owner, you know what? Your agent should be able to take you there, and they should be able to negotiate their own commission with that person and negotiate you a great price on their home, because that is their job. Okay. They should be able to do that for you. How long will it take for your agent to book you an appointment? If you call them up, can you get a hold of them right away? Okay. Can they get you in to see that house the next day? And how accessible, again, how accessible is your agent, right? Market education. This is very, very important. You need to get familiar with the marketplace to gain valuable knowledge of the homes and the values, and understand what your price range offers you. Okay. How do we do this? We go to look at houses. That's the best part. That's the fun part. That's the part that everybody loves, is going to look for houses. Now you're going to go and you're going to be like, I like this house, and I like this house, and I like this house, and I like this house. And absolutely, you should see those houses. But I encourage you to let your agent pick out some houses for you, because all day long we're on the computer looking at this house and looking at this house. Like, that's what we do. Okay. So there might be some stuff you've said, hey, I would like this, I would like this. And we see something and we think that they might actually like that too. Or maybe they don't know about this area. So let your agent pick out some houses and go look at them. Just look at them before you start throwing offers in. Okay. When you go to a home, your agent should be able to give you paperwork that says, these are the homes that have sold in the area. This is the average price. This is the high price. This is the low price. Okay, where do we think that this home stands? You need to have those things. Okay, yeah, as an agent, if you ask me, well, what's a home selling for in this street or in this area, I can probably say, oh, well, if it's in that area, I mean, average is this. Okay, but you know what? You don't know that yet. You need that information. Keep that information so that you can keep looking back on it, right? Maybe you like another home in that area and you look at it and go, oh, yeah, that's right. This is what the home prices were in that area, right? And then once you see a home and you go out and you look at a couple of them, once they've sold, your agent should call you or you call your agent and or text or whatever, whichever way works best for you, find out what that home sold for. All right. This is really important because that, first of all, you're not going to be surprised. Oh my gosh, that house went for, 150 over asking. You're already going to know, okay, 199 is not actually the price of this house. That the actual price of this house is going to be 3. That's the market value in this area. We've seen 3 houses in this area. We've seen 4, we've seen 5. They've all gone around 3. Okay. You know this, you're educated now. It's a very good thing to do is to go out a couple times and just look at different houses, find out your price range. So you've got the education, you know what's going on, you've found a house, you know what the price is going to be, you have seen it early enough on, you've got out there, so you've been able to put in get a pre-inspection, which is awesome. So here in Windsor, we have an awesome guy. His name is Stefan, and he does what's called a 5-point inspection. Okay. Now the 5-point inspection is about half the price, depending on the house, of a full inspection. And it's going to give you like mainly the structure, so your roof, your foundation, all your big ticket items. And when he goes in, it's a half an hour and he's going to be able to tell you what you need to know about that house. Okay. Now you've already had an inspection. So you don't have to put that in your offer. That makes your offer look better. Your agent has sent Sam over the broker side and he said, yeah, go for it. Now you can take off that financing clause. You're looking really good. Okay. What about the closing date? What do they want for closing? Now, if they have a specific date, I want to, what are we in right now? June? I want to close July 15th. Okay. That means they bought another house and their other house is probably closing July 15th. Okay. Which means that date is really important to that seller. And it might not be about price for them. It might not be about taking the highest price. It might be about getting that date. Okay. So we want to take a look at things like that. We want to take a look at like, what are they selling with the house? Is it coming with a dishwasher, a fridge, a stove, a washer, dryer, etc.? Okay. What's included? What's not included? All these things help you make a really good offer where you're able to get the house, which is the ultimate goal. So you bought a house. Yay! You bought a house. You're happy. I'm happy. Your family's happy. It's a great day. It's a great day. So now we've got a couple other things that you have to do before you move in, and we need to get a hold of a lawyer. Okay. So Sam, Joe, Carrie Lynn, they can recommend lawyers to you. I can recommend lawyers to you down here in Windsor. But just like, going to a mortgage broker and getting the right mortgage, just like talking to real estate agents, getting the right real estate agent, you also need to get the right lawyer. So I recommend talking to 3 lawyers, okay, and picking out which one is going to work best with you. Also, something important, if you are moving from the GTA or any other area, please ask if the lawyer has e-sign, okay? Because some lawyers, they're still old school and they want you to come in and put pen to paper. So that's really important. Utilities, getting those utilities hooked up. You don't want to be sitting in the dark, okay? And your agent can give you all that information. Like down here, I've got a list, you print it out and I send it to you so you have all of that information. And then you need some walkthroughs, okay? You need at least 2 walkthroughs. It's better to have 3 because, the bank might want to come in and do an appraisal, stuff like that, but definitely 2 for sure. And one of those walkthroughs needs to be after the current owners have left the house. And the reason for that is because you don't know if they like banged furniture against the wall, or whatever's happened. So if you go through before something's happened, you can fix it, right? But once you've closed, you've closed. It's your house now, you know, and now it's your problem. So let's not have that happen, right? Always go through before, and then you move in. Yay, you move in, and it's awesome. And you know what? It's always good. I try and every year contact my clients and do like a current market evaluation so that every year you know what your house is worth, because this is an investment. Okay. So don't be afraid after you have closed to contact your lawyer, or your agent, and just say, you know, hey, can you tell me what my house is worth? All right. So, I mean, those are kind of the steps to go through. If you have any questions at all, you can always contact myself. You can contact my team. My phone number is here on the bottom, or you can email me, RuthAnn at Team Gorin. But yeah, I'm super excited that we were all here. And if anybody has any questions, I'd be happy to answer them.
Awesome. Yeah. So as RuthAnn was saying, if anyone has questions, please toss them in the chat box, or again, you can feel free to unmute yourselves. That was an awesome presentation, RuthAnn. You went through a lot of practical stuff and going through some questions, because it's pretty stressful. A lot of the first time buyers we work with, right? They have a lot of questions, concerns. So we really just want to be here to assist you in any way that you can, ease any questions that you have or concerns before you jump in. So we'll give some time for you guys if anyone's typing it out. While we're waiting, there is one thing I do want to mention. Oh, we do have a question. Okay, awesome. I'll do the question first. So is it possible to get a mortgage to buy land and build a new house? So it is possible. It could be quite a bit of money to do it that way, if you're purchasing land and then going through a new build yourself. If you're looking for a more straightforward approach and you are wanting to like live or purchase a new build home, it could be worth chatting with contractors for, if they're selling a new build home and then they're responsible for building that all, it kind of lumps everything into one rather than mortgaging out the land first and then looking to go through all of the cost of putting a house on it. So it is possible, but it's likely a more straightforward process to just go directly to a builder and look at what prices they're offering. We're seeing a little bit of a lull. I'm not sure, RuthAnn, you can confirm what it's like down in Windsor, but a little bit of a slowing almost over the last little bit for the summer. So we're thinking that new build homes might be, edging out and becoming a bit more competitive, just as, some people are still a bit reluctant to sell because of COVID. We're expecting a very busy fall, but it could be worth reaching out to a builder for that. And I hope that answered the question. It was kind of a non-answer.
Yeah, actually, right now, I would have to say in the last year and a half, this is the best time if you are a new home buyer to buy a house. Honestly, like we are starting to see a little bit of a lull. And I mean, we have statistics that are coming in left, right, and center. And just like you're saying, Sam, probably in the fall, September is going to come and we're possibly more than likely going to be getting bananas again around here. So I do recommend looking for a house right now. If you're thinking about starting the process, do it sooner than later. As far as new builds go, so we are Windsor and Essex County. So Windsor is like, it's here. And then there's all these small towns around it that make up Essex County. Now, different little towns, we're all relatively the same, but out like Chatham Way, Wallaceburg Way, they're cheaper. Amherstburg, I live in Amherstburg. I drive a half an hour. It's a beautiful view by the water. And they're a little bit cheaper too for the new builds. But I will say last week, I sold a new build last week and the price they just raised the price like the day after we got it. So new build prices are going up. Yes.
We see we have another question here. So I have 2 car loans, and our household income is around 100,000 annually. Our car loan is 500 biweekly in total. Let me just see here. 26. Is it possible for us to get approved for a mortgage? So that's a great question. Um, I'd have to look definitely at what you guys say have saved for your down payment, as well as the other factors like the assets that you guys have. But at 500 biweekly, that's almost just over 1,000 a month. So it could affect. I mean, based on like a rule of thumb that we can do, just looking at income, no other liabilities counted in, is your household income times roughly 4.8. With the new stress test, it's working out more to 4.5, 4.6. So I mean, at a household income of 100,000, assuming you can cover the down payment, you should qualify solely based on income in the $400,000 range. The 2 car loans at 500 biweekly, that could limit you a bit for sure. We'd have to look at, more specifically. But I mean, sometimes we see $300 a month car payments affecting your maximum qualification by almost 50,000 plus. Sometimes, usually a bit more than 50,000, just for 1 car loan. That's 300 a month. So it would depend again, because you do have good income to sort of offset that. But definitely, if you book a appointment with me, we can run through that in more detail and cover that off. It's a really good question, though. We also have another question here from Corey. So my parents are considering selling their home and building a new one in partnership with me. They would move the equity from their home into the build and mortgage the remainder between myself and them. Is this becoming common? How would you recommend we approach this? Let me just read it one more time before I give an answer.
Actually, if I can chime in here for a
second. Yeah, go for it.
Yes, this is becoming popular. We do see this with the prices of homes, new home buyers, people who are coming out of school, especially, you go to university, you got that school loan, you're getting married, you got that wedding loan, the car loans, etc. Plus, parents don't necessarily want to go into a nursing home. So families are kind of joining together, and we are seeing a lot of these multi-generational homes. Absolutely.
Yes, I understand the question now. Okay, so yeah, we again, as RuthAnn just said, we're seeing that a lot. I had mentioned it earlier. I saw an article say the bank of mom and dad, and I think it's really fitting because actually we just closed a mortgage earlier in the year where a couple purchased a home with their mother, and it was actually a duplex. So the mom got the basement apartment, and they got the rest of the home. So that's definitely what's happening. And on the topic of that, temporary cosigners is something that is becoming very prominent in first-time buyers. So we can set it up temporary that they're only on 1% of title, meaning you get 99% of all of the incentives, grants, benefits we chatted about. And then after after you're in the home for 1 to 3 years, we can then take them off. But just adding that extra income helps, sort of increase what you qualify for, especially with the new stress test. It's only, limiting what you qualify for by another 4 or 5%. So yeah, as RuthAnn was saying, it's very common, but definitely something to discuss. On the mortgage side is just, I guess you all would be on as primary applicants, essentially. Even if you're a cosigner, we would still require all the same documents between all 3 of you. And we could use all of your income if needed. We could just use your parents, but you could also be on title. But yeah, definitely reaching out is going to be the best place to start. How you could approach it. What do they think they're going to sell for it? Are they buying a home from a contractor and there's a set price, or is it a new build and they're going to need all the different quotes that they're building themselves? So yeah, it's definitely possible, but there's a lot of the times with new builds, there's a lot of moving pieces. So just reaching out and starting the conversation with us would be the first place to be, or first place to start on. In terms of getting started with that. Angela has a question. Is it possible to get a mortgage while in a consumer proposal or even into a rent to own program while you're paying off the consumer proposal? So that's a really good question. We do have a number of clients that come to us with a consumer proposal, even if it's been, paid off and discharged 6 months ago. Again, following that 222 rule. So if you can get or have 2 credit cards since the discharge with a $2,000 limit for 2 years, that's going to be required to get in with an A-list lender. So to get the best rate, we can. Sometimes it's case to case depending on how long it has been since the consumer proposal, as well as where it's left your credit score. If your credit score is, high enough to support it, we might still have to wait some time, in which case a rent to own program could be beneficial. I will put not a warning, but just to be aware of, is to be very specific with how you go about getting into a rent to own program. You want to make sure that it's a trusted company or trusted investor, because there's a lot of horror stories out there that you'll find. There's lots that work really well, and especially because the purchase price is set once you enter into that rent to own contract. So we were chatting last Thursday with a realtor from Sudbury, and they had someone go through the rent to own program, and because the house price was set in the contract, even though the the home had appreciated an extra $140,000, the purchase price is going to be the same as that contract was. So she's actually reaping in that appreciated increase without having to increase her down payment or do any of that. So rent to own programs are very good if you're maybe a few months out from qualifying for a home or don't have a down payment. So it's a good question. I hope I answered that. There's another question about getting pre-approval. There will be a hard credit score check. Yes, so that's where we start all of our conversations, is in what I've been referring to as a pre-qualification call. So we don't pull credit. We just chat about, and you can give me numbers of the liabilities you have and what monthly payments you're making. And I can use that based on your income to give you an idea of what you qualify for. When we submit it for a pre-approval, it will be a hard check. But again, if you get the pre-approval, it's valid for the 120 days. We will have to recheck again if you find a home with RuthAnn and you put in a offer on the home and it gets accepted, and we start going down that route. If it's within the pre-approval window and we submit with the same lender, we don't have to re-pull credit usually. But if it is outside of, say, a 30-day window, usually we will have to re-pull credit a second time. But that's a good question. And then I think we have a question for you, RuthAnn. So what is the likelihood of finding a 3-bedroom house in Windsor for $310,000?
Okay, so that's a good question. Yeah, you can get that in Windsor, but it's going to depend on what area you want to be in. Okay, so I definitely have people, and this is where market education comes in, right? So if you're saying to me, look, I got 310 and I need a 3-bedroom, absolutely. Let me pull some stuff that I know is going to be in that 310 range, and we can go out and we can take a look at it. And is it going to be in South Windsor? No. But that doesn't mean that we can't find a good house in another area. But can I please say, especially if you are a first-time home buyer, or if you are a single guy or a single girl, okay, buying a home, you're buying an investment for your future here. So even though you really want to walk into like that perfect home, that's probably 450, 500, your budget's 310. Get that 310 home, okay? Gain equity on it, fix it up a little bit, and then sell it and use that equity to get the home that you really, really want, okay? Or I mean, even if you can get an income property that's a duplex, or you can rent out some rooms or anything like that, you know, it's an investment.
Mm-hmm. I've heard a lot of realtors refer to like your home as an additional household income that slowly is growing and growing and growing. And then when you sell or refinance, that home's been working hard for you. You get to take all that equity and appreciated value.
Exactly.
Next. Yeah. Awesome. It's a great question. I see another question from Amin and Maria. Thank you guys for asking all these questions. It's awesome. So what is a rent-to-own program? Please explain. So this is a contract that you'll enter with an investor where you will be renting at the property that they currently own, and a portion of your rent will go towards a down payment. So you'll essentially, each rent payment you make, a portion of that is going into a down payment to actually purchase the home for. So the benefit of a rent-to-own program, you know, as long as it works out well and you're with a trusted and reliable investor, is you also are renting with basically the status that you already own the home. Once you're in the home and renting, and a portion of that money is going towards the down payment, you can make changes. You can paint the walls, you can, you know, move things around. It's not the same as a typical rental situation where everything is a tenant, or a tenant landlord situation. It's again, it's a common, what we see is when people are, you know, a few months out from being able to actually afford their home, or you know, they just don't have any down payment saved. Rent to own programs enable you to rent in the home that you're going to be buying, while a portion of your rent goes towards building up a down payment to purchase the house. And Corey has a question. So if the sale of a house will be used to pay off existing debt as part of the transition, can you determine what the pre-approval amount would be if certain liabilities will be closed upon the house sale? Yes. So a lot of the times that's why, I mean, a lot of people, especially if they're downsizing, we see people, you know, sometimes later on in their life, they'll sell their home, downsize, and use any of the, you know, extra leftover equity to pay off debts or close accounts. Even if it is there and it hasn't been paid off yet, we can, in the pre-approval, have it checked off as, you know, it'll be paid prior to advance. And that basically gives us an idea of what you'd qualify for without that specific liability. And then, you know, either once it's paid off, it won't show up on the report, or we'll just have to prove to the lender that it has been paid off from the proceeds of the sale. I think that's what you were asking. So I hope that answers your question well. These are great questions. Thank you, everybody who has been asking. It really saves RuthAnn and I from awkwardly looking at each other at the end of this, and it helps you guys get, you know, answers to the questions that you want answered, which is why we're here. Mm-hmm. Yeah, and if you have any additional questions or want to run through specifics, you know, Corey, Amin, anybody who's been asking questions, definitely, like, if you book an appointment with me in the link, it doesn't have to be, we're doing a pre-approval, your credit's going to get hit. We can just discuss questions if that's all you're looking for, or just looking for a starting point. And because the best place you can be is in a proactive place where you at least know the answers to your questions, so that I can set you up with an idea of financing, so that when you're chatting with RuthAnn, you can give her a concrete idea of, this is what we want, this is our price range, and then you guys can get shopping. Awesome. Just check Facebook and YouTube. don't currently have any questions from there. I'll give it one last second in case somebody's feverishly typing. Tony says, no question here. Thanks a lot. Learned a lot. Have a great night. Yeah, you as well. Thank you guys so much for coming. I guess we can just close it then. Thank you, RuthAnn, for joining us, and contact information. Yes. So let me see if I can add. So you'll receive a follow-up email from our office, and it'll have the contact information as well. And if you reach out to us, we can forward along RuthAnn's information, unless RuthAnn, you just want to quickly type it in the chat so that they can get that down. Can you also email us a copy of the PowerPoints to review? So if you check out our Facebook page, at facebook.ca/bemortgagefree. This presentation has gone live there, so it will be available on Facebook for the next little bit, so that can satisfy that. But there is RuthAnn's contact info if you want to give her a call, and definitely I can repost my link to book an appointment. And there is my link as well. Also be looking at getting the house appraised in the near future. Yes, so that helps as well. So we do have an internal system that we can look at to get to get an estimated value of your home if you're looking at selling it, and we can use that for our calculations until it gets a formal appraisal or until the house sale actually sells. So we can definitely look at some rough numbers. Again, getting appraised is a great idea to get a real concrete idea. And RuthAnn has added her social media. Go and follow and like all of her posts. Alrighty, so I think that's all of the questions. Thank you to everybody who came out tonight. Again, thank you again, RuthAnn. How does construction bridge mortgages work? So bridge mortgages are, they're very, how can I say it? They're very case to case, and there's a lot that goes into it because we do have to look at the numbers that if the house sells before the finish date or before the closing date, we can get a bridge mortgage. It would be a lot of specific figures to what your case is, as in like how much your house sells for, how much the new build is going to cost. So again, we would apply for a bridge financing to cover that gap. If the house purchase date is before the sale of your current one, and you don't have that money because it's tied up in the equity of the home. So definitely, Corey, my best recommendation is just to reach out to us, and we can chat more specifically on the exact numbers. I do appreciate all of your questions, and I'd love to chat with you so that we can get a more concrete idea and look at more specific numbers. Susanna has a question here. How does the construction house or blueprint works? How we can apply? I'm not sure I fully understand, Susanna. Again, if you're looking for building a home yourself, you'll have to get in touch with a contractor to work out all of the components of it, such as the framing and surveying, and you'll have to get quotes for all of that. So I will say all self-builds require a lot of paperwork and a lot of information, because the lenders don't want anything left out. They're going to want every single quote for electrical, plumbing, foundation, gravel, masonry, literally everything. So there's a lot that's involved in that process. And then I guess, yeah, if you're looking at purchasing a new home from a builder, that's relatively straightforward. But again, it's really important if you are looking at getting a home from a builder to go, with an agent or with a lawyer and have them review the contract to make sure certain things are included, because a lot of the times certain things maybe that you want won't be included in the contract. And, kind of as RuthAnn was saying, once it closes, you're kind of stuck. But I see you've raised your hand, so RuthAnn has something to say about that.
Yes, very important for everybody out there who is looking at new build homes. Okay, please read your contract, but also please make sure that your contract does not have in it that they are allowed to increase elements. Okay, if the price increases for elements, that they're allowed to charge that back to you. It will be small and it will be in there. Be careful that it's not in there. If that's in there, you don't want to work with that builder, okay, or you want to cross that out and you want to get rid of it. All right. We're really conscious of this right now, and a lot of builders are not putting that in there, but there are still some builders who are. So please keep an eye on that.
Could you send the recording of this video via email? That would be, or at least the slides. Yeah, I can send you guys the, I can send the recording to a few of you guys. But again, so it will be available on Facebook. You can rewatch, pause, write down, because again, I think I go through the incentive grant section very quickly, and there's a lot of numbers that maybe don't mean anything to you in the moment, but once you've had a time to digest and think it all over, you can definitely look at back up on the Facebook page. So I'll pause it again one more time if there's any other last minute questions. If you've been wanting to ask a question the whole time but haven't, now is your chance. Yeah, I can share the Facebook link. That's a really good point. Ooh, looks like I lied to you. So it is facebook.com/Canadian Mortgage Webinars. So that is where this video will be. So I don't think you'll be able to see the chat on that, but you'll see RuthAnn and myself and the presentations. Awesome. So if that's it, I will thank you guys for carving out about an hour and a half of your Thursday evening. I'm sure there was hockey on or something, so I appreciate you guys hanging out with RuthAnn and myself. We're very happy that you've made the first step and have attended a webinar because it shows that you're interested, as well as all of the questions. It's been awesome with you guys. Hopefully look forward to hearing from some of you or most of you soon for a pre-approval call, as well as a chance to win a $25 Tim's gift card. That's like 25 coffees. That's awesome. Almost a month. So yeah, definitely reach out, and thank you guys all for coming. And thank you one more time, RuthAnn, for coming out tonight. All right.